Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show on Newstalk 7 KOH. It's a pleasure to be with you and a pleasure to be with my co-host. We got one of two today. One of these days we're going to have all
Right, all
three again. I
three.
promise. I promise. Not going to be this Thursday, so you're going to have to wait till next week to have all three. They are busy boys. They are busy boys. Dwight Millard of On Q Home Loans. How are you, my
I'm
friend?
doing fantastic, John.
Good,
I missed you
good.
guys on Thursday, but
Missed you too, buddy.
Yeah.
Missed you too.
You know, you got to
Hopefully
get happy.
Did you have a good trip?
I did.
Good. Glad to
Happy
hear it.
wife, happy life, right?
That's the name of the game, brother.
So
That's
I,
the
yeah,
name
so
of the
I
game.
owe you for that one. I didn't have to cut out somewhere and go. So I appreciate
Exactly.
it. I
Yeah.
appreciate you.
See, that's the advantage
give,
of great
right?
friendship. It really
It
is.
is.
Advantage of great friendship.
Yeah,
No,
yeah.
that's good.
But
Well,
me
we
being
missed
gone,
you.
the market's done okay, right? So it's
You know what? Yeah, you
Go
want to
away
head
again?
out, buddy? Yeah, you want to head out?
Go
Yeah,
away again? Yeah.
We're doing just fine. You know, it's remarkable, Dwight, to sit back and sit here. And I was thinking about this, getting ready for the show. You know, you look at how resilient our economy is, and when I say economy, I mean stock market mixed into that same word. And you sit here and you look at all the things that are going on. The market just brushes that aside. I never in a million years would have thought when the news came out on Saturday that, we are taking over the Strait of Hormuz. You could have viewed that as a positive or as a negative, right? And this market has taken it 100% as a positive. We closed at a record high on the S&P 500, or yeah, almost, I should say, almost. We touched it intraday, but didn't quite close there. But you look at the strength of the stock market. You look at what mortgage rates are finally starting to do in your favor, in our
Mhm.
listeners' favor. You look at everything coming around, and again, I used the analogy on the show yesterday, and it sounds so corny, but I'll use it again. It's a little engine that could, right? It just keeps going and going, and it's almost scary to sit here and think. Imagine if we didn't have all the BS that we're dealing with, on a global basis, and we just really stuck to the fundamentals of this market, where things could be. I mean, I was joking this morning on one of my stock updates. I think we could easily be back to 50,000 on the Dow. We're at what 48,535.
Yeah.
That's not that far to go.
Mm-mm.
If we continue this momentum that we have, right?
Yeah, I love to keep saying every day, another record-setting day. But John,
Yeah.
what's amazing, and and you've actually alluded to this, and I know you talked about it. I mean, all the fundamentals are there. You get a headline. I mean, that's a big headline.
Sure.
Taking, going after Iran and things like that. But you've talked about this pent-up demand for. I mean, people. When you go back to the 08, 09, 10 crisis, right?
Yes.
It took us a long time to recover from that.
Did.
Then you
It
finally
did.
feel like you recover, right? And you start to see the wealth start to accumulate. Then COVID hits,
Yes.
right? And it knocks you 10 more steps backwards.
Yep.
Now we're a few years out of that, where people now are ready to really just embrace their financing, their wealth, whatever that objective is. I think that's, and then you get a little hiccup like Iran, and we're still going to have some of those things that you can't predict.
Absolutely.
But the market, to your point, I think in any other time, this would have been probably a really unstable environment.
Yes.
We saw the downs, but you kept saying, hey, we'll ride it out. We'll just
Hang in there.
we'll get
Stay
through it.
diversified. Write it out.
Yeah.
Exactly.
So, I mean,
Well, I think something that came to my mind when you were mentioning the 08, 09, 010, time periods and things, and I'm sitting there thinking, my mind's going, okay, what's different? And the number one thing that comes to my mind, Dwight, is we didn't have AI at that point. And I don't mean that it's changed our lives and made us more productive and so on and so forth. What I mean is we didn't have it as almost an investing class in and of itself, right?
yeah.
You look at these companies, how many new companies there are out there, hundreds, if not thousands, and the revenue that firms are able to generate now. I mean, you saw the numbers, Goldman Sachs yesterday, JP Morgan today, Wells Fargo today, earnings season just begun. These companies are making massive amounts of profit that they only dreamed of before. Why? They've got fewer people. They've got technology that's making them more profitable, more efficient. And so it's a new world. And that's the part that's, exciting. If we can just kind of get past all this Iran stuff. And the other point I wanted to make before we let everyone know what our topic is today is the other thing that strikes me is how, and I wish I could figure out a perfect word to describe this. So bear with me as I try to just put the words together. How this market listens to every word that the Trump administration says. You can be down, oil can be up, so on and so forth. And all that has to come out is a True Social post or some headline from a news source of a phone call that a CNN reporter had with the president saying, and this is what did it today. We're basically thinking about having a second round of negotiation talks with Iran. And what does the market do? It takes off. What
Yeah.
does oil do? It tumbles. Just off of that, I keep calling it the golden carrots that are
Hmm.
out there. And that tells you back to you just said two words or three words, pent up demand. That just shows you investors want to be invested in this market. The capital is there, the liquidity is there, the fundamentals are there. It's just some were hesitant, of course, because of the Iranian situation. But all you got to do is say, this is happening. Or, I mean, can you imagine when the Navy comes out and then the Trump administration says, yeah, the U.S. Navy has just reported that the Strait of Hormuz is clear of all mines and traffic is flowing.
Yeah.
Holy
Yeah.
moly. Folks, if you're sitting on the sidelines right now, or as we're going to talk about here in a moment on the mortgage side of things waiting, the house buying side of things waiting, you're going to miss the boat because I'm telling you, this market is going to rip. The stock market's going to rip higher. The mortgage rates are going to tumble. The bond market's going to go up. Everything is going to go. Holy moly, that was really worth the pain that we went through, for the last 6 weeks or 7 weeks, however long it's going to be at that point.
Well, John, and he may
No one's
go down
factoring
as
that in.
he may go as the master chess master, right? I mean, he may
Yeah.
go down. I mean, you never know till it's. But I mean, even bringing what was it, Lebanon and the U.S. today or Israel today?
Israel.
And
Yeah.
it's never happened. I mean, these are
Right.
things that I think the global investor world love to see, right? I mean, this only solidifies maybe a unity or at least some more stability, I guess. When you start
I
to
think you're
see,
being too. I think you're being too soft when you say that. Brotherly love to you, and I'm sorry to cut you off, but I think you're being too soft to say that. I think it really boils down to this: it's the military might that the United States of America has. That's
well,
if you
we
if you think about it,
demonstrate.
that's yeah, right. And you can come back and say, "Oh, great negotiations are great." This, but the bottom line is, who in the heck's going to mess with us, right? I mean, he could go. God help us that this happens, but he could go country to country to country and do whatever he wants to do because you've got two major players that can compete with us on a military basis. You've got Russia, which I don't even know if they can even compete anymore, but you've got China, right? No one really knows what they're really, really capable of because they've stayed out of everything. But other than that, it's like the coast is cleared. I love your analogy of the chess side of things, but I don't think it's just kumbaya. I think it's people are going, you know what, they're pretty powerful of what they can do. Look what they just did to Iran, and they can do that to just about anybody. And it's like, hey, we better play nice. Let's be in the
Yeah,
same
yeah,
playground and the same sandbox.
yeah,
Is what
yeah,
my point is.
yeah.
No disrespect to you by any means, but yeah, I just think it's the military muscle has been shown, and
Pretty
kind
impressive
of
too.
get
I mean, John,
pretty impressive.
I was reading a thing about going in and rescuing that second pilot. That
Yeah.
traditionally can't be done. What they did.
Oh no.
What they
No,
did
they said
and the way they
something like
did it.
150 aircraft were
Yeah,
involved. I mean, just aircraft alone,
yeah,
not to mention how many
yeah.
personnel. Yeah, you're right. You're right. So it's a very interesting time, no doubt about it, and it's starting to feel good, my friend. It's starting to feel good, and all of you are my friends. It's starting to feel good right now that we're starting to see light at the end of the tunnel. Of course, things can change, just obviously as we just said, with a true social post or with a headline or anything like that. But as Dwight and I always say, when he and I have the joke, and I say, Dwight, what kind of day was it? It was a record-setting day. And what do I always say afterwards? Enjoy it while you can, because you never know. Don't take it for granted. Don't get cocky. Don't get arrogant. Don't get out, over your skis, as the saying goes, as far as your risk tolerance, your asset allocation. Stick to your plan, stick to a diversified portfolio. Hopefully you've heeded our advice and you've picked picked up and pick and chose some of those names when they were down, where the world felt like it was coming to an end. And, you're being rewarded now in most cases. So yeah, we got a smile on our face today, don't we,
Yeah,
my friend?
we do. Amen.
Your handsome smile looks as good as always. So let me tell you what we have lined up for you. So based upon everything that we just said, let's get down to the business side of things today. After the stock market recap, I've asked Dwight to do something that we haven't had a chance to do because, again, there's been so many, obviously, other headlines. But I think it's a really good time. Back to my point that if something great happens, like the Strait getting open, that's what I see as the next major milestone. And this thing rips like I think it's going to, and the bond rates market, the bond market skyrockets, rates go down. We want you to be prepared, right? We've been preparing you all along, but this is your next hurdle to be ready for if you are in the market to buy or even to sell, but really on the buy side. So what I've done, I've asked Dwight, I said, look, buddy, I need you to go back and blow the dust off of your playbook of loan programs that are available out there, right? It's probably been, I don't think we've even done it in 2026. There are so many programs, folks, that Dwight is going to enlighten you on. You're in for a major treat today, because let me tell you this. If you think you need a perfect credit score, if you think you need 20% down, if you think you need a traditional job to buy a home, I want you to think again, because what this man is going to share with you today is going to break all of that, right? He's going to come out today and say, wait a minute here. Bottom line, if you have a desire to buy a home, there is a program for you. Good credit, bad credit, big down payment, low down payment, it doesn't matter. But you cannot go on the internet and go, well, what programs are out there? You go to a man like Dwight that's got 40 years of experience, that no matter what, he gets the deal done. I've seen it happen over and over again with clients. The man can work miracles. So not only does he have, and especially now that you're with OnQ Home Loans, you have an additional plethora of tools in your Snap-on toolbox that you have available. And so you're going to be sharing that with us today, and again, break that misconception, because here, folks, here we are. We're only mid-April, right? We're just getting into the buying season and so on and so forth. And now things are starting to shape up and calm down on a global basis. Dwight, there couldn't be any better time right now to enlighten us on what's out there at this point. And like I said, I know you got some new programs now that you're with OnQ.
Yeah, John, and we're going to go through it. And again, it's been probably too long. It's always good to have a refresher course, because I mean, people are there. There's a myth out there of what you need to get in. And we'll cover, kind of maybe the way I would go, the progression of what loan program I go here. And I think people will get a true feel of what that looks like.
I love it.
But 635 programs, John, we got something for everybody, right?
Is that all? Just 635?
635 existed.
Unreal. All right. When we come back, we're going to get down to the stock market, give you a recap of what happened today briefly, some of the movers and so on and so forth. And then we'll get into our topic, the mortgage programs most Americans don't know about, but they should, and they will, thanks to Mr. Millard. Let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH with Dwight Millard of OnQ Home Loans. Aaron Clark is tied up. He's actually not tied up, but he's making money. He's doing some business right now, Dwight. He's closing a deal right now.
There he is.
So, of course, we want him doing that. Of course, we want him there. All right. Once again, we're going to get to our topic here momentarily. The mortgage programs most of you don't know even exist, but you should, because there's a lot of them. Like Dwight said, 634. Don't worry, we're not going to bore you with those. Right. One thing we are going to do before I get to the stock market side, Dwight's going to go through really kind of 4, we'll call it primary demographics of those of you out there. First-time home buyers, the move-up buyer, the investor, and of course, those that are self-employed, because those all have unique challenges in and of themselves. So Dwight's really going to focus in on those, and then obviously a bit more. But if you fall into those categories, do not miss the upcoming segment here. Okay, so let's get to the stock market side. So once again, Trump administration said we're getting ready for the second round of negotiations with Iran. Market got excited, market rallied, and also, as I'll share with you in a moment, we had a really calm PPI report this morning. So all those things factored together to give us one heck of a day. 318-point gain on the Dow Jones Industrial Average, 0.66%, to a close of 48,535. NASDAQ rose 455 points, 1.96%, and the S&P up 81 points, or 1.18%. I should mention the Russell 2000, the small caps, nice move here. I like seeing this, 1.32% gain, up 35 points. On the oil front, down $7.66, Dwight. $7.66 decline. 91.31 a barrel. Need a couple more days like this. We'll kind of get back to that 70 range where we want it. Gold was strong, $88.10 increase, $4,854.90 an ounce. Down 4 basis points, my friend. I know you know this one. Down 4 basis points on that 10-year to yield of 4.26. Bring us up to date on the mortgage side.
Yeah, so I missed you on Thursday, but if you just go back, 10, maybe 2 weeks ago, we were at 6.6, right? I mean, on the 30-year fix, which is when the big part of the conflict was going on. Today, we're down 8 basis points on, according to Mortgage News Daily, 6.31. John, we broke the 6% barrier on the governments, 5.9, 5.88. Even your 15 years at 5.96. So those are big. I guess points you want to get to, but
yes,
you're starting. Just even this kind of movement you start to see, and you're coming into the great part of the year where that real estate activity happens. That you couldn't ask for a better gift right now,
right?
And it's not done. I mean, we finished up 25 basis points, good, in terms of the mortgage-backed securities. So if it carries over to tomorrow, you're just going to keep rolling. So I mean, we'll take it where we can.
Yeah, I love it. Great. 631. I love that on the 30-year. All right, love this. Also, here's some of the big movers I want to share with you today, and this is what we like seeing: the major tech names, some of the Mag 7 names, etc. Moving on up, we'll start with Meta. Big day today, $27.92 increase, and I'm not going to bore you with all the reasons. It's just strength. Bottom line, there's some individual stories, but bottom line, just strength. Right? They're gobbling up these names that have been beaten up. So big move on Meta, $27.92 increase, 4.4%, 662.46 a share. You had Amazon. Man, they are just rolling. They're really starting to pick up some momentum. $9.08 increase, up 3.79% to 248.97. They're going to give Elon Musk another run on the satellite side of things. They purchased Globalstar. GSAT is the symbol, meaning Amazon purchased them. A little, I think it was about $11 billion price tag. But Globalstar moved Globalstar up $7.02, $79.91. That was a 9.63% increase. So Wall Street liked that news. Again, we know that Amazon wants to compete on the Starlink in the Starlink world, and so this was a major acquisition for Amazon to get them closer there. Very impressive with NVIDIA. We're knocking on the door of $200 a share. Remember, we spent a lot of time in the 170, 180 range during this conflict. Today, up $7.15, 3.78% increase to 196.46. Chip stocks starting to move. Besides NVIDIA, Micron, $39.10 gain, a little over 9%. And then once again, we had the banks. Citigroup was a standout after topping earnings numbers. Stock rose $3.37 to 129.65. JP Morgan had a really strong earnings report, but it was kind of one of these, sell the news, you bought the rumor side of it. But they just, issued great numbers, but finished the day down $2.56 to 311.12. Wells Fargo, mixed report there. Wasn't great, wasn't bad. Lost $4.91 to 81.73. And then we saw the airlines. I'm surprised they didn't move more, but they were moving in the pre-market before even oil started to move today. There were rumors that, well, actually it wasn't a rumor. It was confirmed by Bloomberg that the CEO of United Airlines floated the possibility of a merger with American Airlines. So those stocks moved, especially American, up 8% today, 90-cent gain to $12.13. United rose $1.97, 2.07%. So those were the big movers going on today. Where do we sit on a year-to-date basis? Boy, this is amazing. It's sneaking up real fast, folks, especially on the small cap side of things. Listen to these numbers year-to-date. We got the S&P up 1.8, so everybody's positive now. The S&P's up 1.8 for the year. NASDAQ's up 1.7. The Dow's higher by 1%. But Dwight, the small caps, the Russell 2000, which, they're the big movers on the upside. They're the big movers on the downside. But remember, they're usually a market leader. You watch what the small caps do. Gives you a good indication of the direction. 9% gain. Went from negative to now up 9% just in roughly a week or so. So that is a big, big move already, just being mid-April, 9% gain for the Russell 2000. So again, very much of a positive there. Just want to sneak in the PPI report, measure of inflation, of course, on the wholesale side. This got the momentum going this morning. Remarkably, caught everybody off guard. Very light numbers, up only this is March's data. So from February to March, PPI was up only 0.5% month over month. They were looking for a 1.1% increase year over year. Kind of a nasty number, up 4%. But the Wall Street game, less than expectation, which year over year, the estimates were up about 4.26%, right around there. So you strip out food and energy, we're only up 0.1% month over month, and year over year up 3.8. So once again, you can see how much oil impacts the calculation there.
John, that is just amazing. Like you said, surprisingly. I mean, it brings the Fed back into play now. I mean,
yes, it does. Yes, it does.
Your normal wisdom would say
that's why your rates went down today.
This stuff would create something else.
Yep.
But yeah, maybe the Fed comes back into play again.
You know what they're saying was the counteraction to why the inflation was lower, higher than expected or higher than normal tax returns. Now you may think, okay, so the consumer's got a little bit more money in their pocket. They can go out and spend more. I don't know how that analogy ties together, but that's what a lot of the news sources were saying today is, yeah, a lot of money floating around the system at this point. And again, PPIs on the wholesale side of things wasn't such a great number on the CPI side a few days ago. But yeah, they're saying the consumer's got a lot of cash in their pocket right now, higher than expected tax returns. And so, yeah, that kind of
spend, baby, spend, right?
Spend, baby, spend, which creates inflation. So yeah. I don't know how that scenario plans out.
I don't know either, right?
I didn't write the story.
Maybe they're just paying off their debt, John. Maybe they're just paying their bills.
Go. Of course,
maybe they're just paying their bills.
They're not going and buying it. They're going to do the smart thing. They're saving, they're investing, and they're paying off their debt. Right? Go. Yeah. Wink, wink. All right. When we come back, the mortgage programs most of you are not aware of, but we're going to make you aware of them when we come back with Dwight as he goes through some of the most important programs. And then we'll focus in on the demographics: first-time buyer, move-up buyer, self-employed, and the investor. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with my dear friend and yours, Mr. Dwight Millard of OnQ Home Loans. Aaron has the afternoon off as he is hard at work. Once again, a great day in the market. 317 or 318 gain on the Dow. NASDAQ rose 455. S&P up 81. All right. Once again, as we said at the beginning of the show, we think, again, as this Iranian conflict, at least for the moment, begins to calm down, and we're seeing reaction, obviously, in the stock market, the bond market in a positive. We're seeing oil prices coming down. We want to prepare you. This, as the boys have been saying over and over again, this should be a really good spring buying season, summer buying season. So we thought it would be an excellent time for Dwight to go back and really kind of refresh our memory on all the different programs that are out there. And just remember, our goal is to break a misconception. You don't need perfect credit score. You don't need 20% down payment. You don't need a traditional job. A lot of things that were all brought up, especially those of us that are older, those days are gone, right? There's so many great new programs out there. So Dwight's going to kind of just refresh us on some of the most common programs, and then he's going to narrow into some demographics of first-time buyers, investors, the move-up buyer, and the self-employed. So take it away, my friend.
So, John, most of what we do, you have to qualify for. I mean, right, no matter what program we talk about. So it's going to be debt to income, it's going to be credit, job history, those type of things that you were talking about. So
all the basics,
so credit still is king. Just make sure, if you haven't looked at a credit report in a while, I'm here for one. Go get online, whatever you got to do, kind of know what your credit profile is, especially if you're thinking about getting in the game as a first time repeat. Doesn't matter. So, but with that, because that's what's going to drive not only your products that you can go into, but it's also going to drive interest rate, mortgage insurance, your homeowner's insurance. It's going to drive everything. So if it was me, John, and I'm sitting there going, let's start with the first time home buyer. First of all, if I'm eligible for VA, I'm going VA, right? I've earned it. I know you're a big proponent of the Veteran Administration. If you have a VA eligibility, let me check it. If you don't know, it's easy. It's online now. But VA, it's 100%, no mortgage insurance. It has upfront a VA funding fee, but that's minimal. They let you tack it on. And if you're disabled in any percentage, sometimes that's removed. So 100% VA all the time. Love veterans. It's just the way to go. And as a matter of fact, John, it's a way to go even for a repeat buyer, like you said, a move up. If you got a VA on the existing one, you're going to keep that house. Let's get rid of it. Let's get it back into a conventional, use a VA on your purchase. Right? Good point. Yeah. I mean, it's going to cost you a few dollars for the refinance. Now you got a conventional loan. You can go use the VA on the new one.
Real quick on that point, I want to throw this out, see if you agree with this. I know a couple people that have VA loans, and they literally get phone calls, proactive phone calls from their lenders, their VA lenders, telling them when it's time to refinance.
Yeah. Because and it's in as you know, it's probably an AI and it generates all that stuff, but it's called an interest rate reduction loan. It's an IRL is what they call it. It's very easy on VA. You don't have to requalify anything. It's just so easy. So that's why they kind of targeted on that. But the other thing too that even on a VA, and I want to get too far on this, but you can actually have still remaining benefits and use it on another house. So typically it's difficult. So if you bought a house for $300,000, I'm just using a number, $300,000, and now you're looking down the street maybe cross town or in a VA, you still have some eligibility. So let's see how much eligibility you still have. So it's not always you can only use your VA on one house. Yes, you can use it on. You can actually have more benefits to use even on a.
But you can only you can only have one VA loan at a time.
One VA. No, you can have multiple, but it's a maximum threshold that you can have to stay within on your eligibility. But typically, to your point, most of the time it is one because of just the sheer number. Secondly, then, John, let's go into my favorite, and that is if you've got great credit scores. I mean, I'm talking 740, 760, 780, 5% down conventional. Do not tie up your money.
First-time buyers now.
First-time home buyers, even repeat. Don't tie up the money if you have high credit scores. because what you will get is you'll get a tiered mortgage insurance premium, which is really low with a high credit score. And you have the ability to get rid of mortgage insurance. You can self-remove it down the line. So, that gives you the bandwidth if you only put 5% down. Now, again, another 5%, you got to explore how much it really changes your payment. It's not going to be a lot, what people discover. So in my humble opinion, if you've got great credit scores, explore the 5% down conventional loan. You'd be blown away.
But the argument's going to be, people are going to always, I know you hear it obviously a lot. Oh, but then I've got PMI.
You got PMI, but you can always get rid of it under conventional. So you always have that ability. But
Would
John,
you if you have a
equity, 75 to 80 depend on the investor. But John, if you look at it, the self removal, depending on, again, if you have high credit scores, you would be blown away. Sometimes the premium's only $49 a month. It's versus putting a whole lot more money down and tying up the capital. I'd rather have them call you and say, hey, go make this other 15% work for me, and I get. But
okay, so that's the strong credit score. What about the average person who's
so the average credit score? Then you either start flirting with, do I put higher amount down on conventional, or do I default over to FHA, which I love too. FHA is 3.5% down. It will give you flexibility in credit scores all the way down to 580, some even lower. And it'll give you a little more flexibility on your debt to income ratios. It will go over a 50 where conventional will not. So your debt to income bottom ratio, all your debt in divided by your income will go to a 55, 56. It's amazing, John.
Amazing.
Yeah. And for those that are struggling with an FHA getting an approval, it's amazing if you put an extra 1.5% down, so you do a 5% down FHA, it's amazing. Pandora's box opens up because now, the reason being is because now you're not the highest highest LTV.
Yes.
The 1.5, it's amazing what it does.
Incredible. And so even still at 5%, it's very low.
But so let's stay on FHA for a second. We've talked about this, John. What an incredible way to go buy multi-units, 1 to 4 units, using an FHA loan. 3.5% down. Remember, you have to occupy one of the units, but there's no better way financially to go buy a multifamily if you're prepared and willing to live in one unit, to buy it through FHA.
And remember, folks, that FHA limit varies depending upon certain
units,
areas.
And the units and the number of units. And at break, I'll go ahead and bring up. When we come back, we'll bring up Washoe County and give them an idea. But it's an amazing. Now, tied with all that, John, I know.
Can I add one more point? I think our listeners probably want to know. So back to the multi-unit. Again, I was going to bring that up, so I'm so glad you did. How long do you have to always occupy? Let's say it's a fourplex. Do you always have to occupy one of those 4 units, or can you do it for a year or two, move out?
Life changes.
Yeah.
Right. That's the intention. Life changes. You move out of the area.
Okay.
But it's and again, I've said this, as long as you're making your payment and there's no hiccup, I don't know if they have the resources to go door knocking like they used to do. But your intent, you have to move in, and you really want to move in because you don't want to create. But down the line, nobody's watching over you and following you to work and all that. So, along with those,
squeeze one more in.
Yeah, well, along with those conventional and FHA, John, we have down payment assistant programs. Okay, so the state of Nevada has a couple. Every state has down payment assistant resources. What they're going to do is give you money for your down payment and or your closing costs. In return, you're going to get a little bit higher rate, but it gets you into the property. So it's a little harder to qualify sometimes because your rate's going to go up. So if you don't really have a debt to income ratio problem, it's a fantastic product to use, and the DPAs are amazing. One last one is USDA.
There's an income threshold before you qualify.
There's income. There's different. There's some restrictions on those. That's why there's tough. There's income. But USDA. Let's talk about that one real quick. That's for the rural counties. Lyon County. Believe it or not, you get down into Douglas County. All of Lyon qualifies. It looks, walks, and quacks like a VA loan, but you don't have to be a veteran. It's no money down, minimal mortgage insurance. It's a fantastic program. But in 2014, they kind of did some regulations that kind of separated, so not everybody qualifies for it. I mean, it's a credit. They have to have certain credit trade lines and things like that. But if it's eligible, USDA, at least explore it. The rates are fantastic.
Absolutely.
They follow government rates, and it's 100% financing.
Beautiful.
All of Lyon County.
Love it. Love it. And I remember you saying some of Washoe County, believe it
Yeah,
or not,
there's
right?
some pocket areas in
Some
North Washoe.
pockets. Yeah. Yep, exactly. All right, we'll come back. We'll talk about those of you that are the self-employed, right? You always think that's a big challenge. Not quite the case. Dwight will wrap us up on our mortgage programs that you should know about. Let's wrap it up, speaking of which, with Kristen Snow in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Jack, our producer, played a little Van Halen for us, Dwight. I know you couldn't hear it, but the old high school days on that song.
Oh, yeah.
Phone number, my friend.
Yes.
Thank you, sir. All right, we talked about the first-time buyer programs. We talked about a little bit on the move-up side of things. Let's talk about the investor and the self-employed.
Yeah, so the investor, John, it's pretty simple. The traditional is you can go as little as 15% down on a conventional. You can only go conventional on that unless you buy the fourplex with FHA and live in one. So that's the good. You still would have a little bit of MI, but it gets you in with, you still got to qualify, but gets you in as little as 15% down. There's another program out there called the debt servicing program. It allows you to buy an investment property as long as the rent on the property comes in $1 higher than what your mortgage payment would be. So there's really no qualifying. So
wow.
You get people like that maybe just open up self-employed business or something like that, doesn't qualify, but they have money to put down. You can put it down and go on a DSR. Now, typically there's a trade-off. The rates are going to be higher and things like that. Typically there's no mortgage insurance, but it does get you, gives you another product. Yeah. So then let's go to the self-employed. That tends to be a tough one for a lot of people. So traditionally, John, the self-employed person needs 2 years tax returns, basically in that same line of work. We're gonna also, if they're Corp, S Corp, C Corp, we're gonna need the business tax returns as well, just to make sure that the business is alive and kicking. So if you average those 2 years and they don't qualify, then that's where most of it breaks down for the self-employed individual, right? Because they don't qualify because the income, they say they make 100, but by the time you get down to the bottom, they're making $1,000 a month,
write-offs.
right? So we get all of that. So there's a couple things to that. Number one is the first thing that people need to remember. If you've been in the same line of work, you've owned the business for 5 years plus, we can get away with just 1 year tax return. So if like, let's say, for example, in 24, you had an awful year, and 20, but you've owned the business since 19 or something. 25 was a great year. I don't have to use 24. I can get away with just 25.
That is a huge advantage. Yep.
Yes. So just kind of keep that in mind. If it's tough, if you get into a position where you can't qualify, even if you go to 1 year tax returns, John, believe it or not, we have a 1 year 1099 program, which means that if you're a 1099 employee, we take a 10% deduction is all, and we use that as your income. There's a no ratio loan with 25% down, John. I can do a no ratio loan. I don't have any income on it. And finally, you got the bank statement loans, that are, and all these are very aggressive, John. They really have come back to so there's really not a no doc where they don't verify assets and all this. Mm-hmm. So it's credit and basically assets on a lot of these, but they're, so there's a way. These self-employed, I'd always try to go the best way, the traditional way, but if not, there are avenues to explore. And there's more and more coming around the corner.
And you've also, we didn't have time to get to it, maybe another show we'll do it. You got some incredible loans on manufactured homes also, which is a
one-time
boom
construction
right
close on the manufactured. Yeah, amazing.
There you
products.
Go. So the bottom line, folks, we don't expect you to be an expert, but now you know roughly what's out there. All you got to do is pick up the phone, call Dwight. He can direct you into the proper loan program that's going to be very, very best for you. One more time, Dwight, on that phone number.
Yes.
You are the king, man. Thank you. I appreciate you so much enlightening us on that, Dwight. That was awesome. Great job as always. And I will be back with you tomorrow on the Jon Sanchez Show. God bless. Have a great afternoon.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited, an equal housing lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.